Notice where we've kind of just stalled here. And again, that corresponds with this area, which if you take a trend line kind of right under the consolidation lows here, and we just drag that across, you're kind of just on top of that level. So right now, this 26,800 level, that's your current support up to 26,800 to 27,000. But I do think that breaks. What you're starting to do here is form a bearish flag consolidation pattern. So bearish flag is sideways chop, which again is kind of eating up the bulls that are buying, but they're not getting a pop out of their buying because sellers are still making that selling price.
10 days after Bitcoin broke the $30,000 resistance, the cryptocurrency market has taken hits from all directions, and well-known technical analyst Gareth Soloway has reiterated his earlier arguments that we are still deep in a bear market. Analysts and investors in Bitcoin believe that this signals the start of a new bull market, and proves that the 15,500 FTX low marked the bottom of the previous cycle. But Soloway remained firm, saying Bitcoin needs to stay above $3,500 for a few more days before a new bull market can be confirmed. Bitcoin's value has been steadily declining since March 29th, and it is currently trading at around $27,300. CoinMarketCap reports that the leading cryptocurrency has lost over 7% over the past week, while the largest altcoin by market cap, Ether, has lost over 12%. Soloway recently discussed his predictions for Bitcoin and the cryptocurrency market in general, in an interview with Crypto Banter. The veteran trader and analyst claims that the current economic chaos in the United States and the continuous regulatory onslaught pose significant risks for Bitcoin. Bitcoin is at a major support level, but Soloway said in interviews that doesn't mean it can't go lower. An impending recession, which has been reluctantly confirmed by the Federal Reserve, is one factor that Soloway believes would play a significant role in price declines for Bitcoin and other risk assets. Although the Apex Bank predicts a mild recession, Soloway believes the situation will be much worse than their estimate, with a moderate rate to severe recession and inflation still above the 2% target. If markets crash, will the Fed print more money to save them? And if they don't, will the markets be able to weather a downturn and recover without suffering too many casualties?
So essentially what we're looking at is a break of this 26,800, sends us down to 25,000. And 25 will be a monster support. So again, that would be where you would start to potentially flip into a long position on Bitcoin. Now, again, us not breaking above 30,500 and confirming, to me, still tells me that we're still in a bear market. So you just want to be overall careful, but I do expect major support around 25,000.
What would convince you that we actually are in a bull market?
Well, at least for Bitcoin, it's that 30,500 level, right? So if you can get above that and confirm, that was the psychological level here that kind of denoted the 2021 lows, right? Where we had that big dip right down to 30,000-ish, give or take. So again, that would have been a key break point we can see right here. So on a technical basis, that's kind of what I'm looking at. And that's one of the reasons why I expected the market to push us back down on Bitcoin. Now, looking at like the CAC and various other indices, I think number one, you have the US markets that are more likely to be in a bear market that will continue to see selling. You have some issues there in Europe. They're still coming out of some things. But overall, the bottom line is, let's keep in mind that the Federal Reserve has said that we're going to have a recession in the second half of the year. Yes, they said mild, but Rand, you remember transitory, right? So they said transitory, and look at what we got. They tell me mild recession. Right away, my mind jumping to probably at least a medium depth recession. And then you have other players like Warren Buffett coming out saying that year over year, one of his retailers' sales were down in the last month 22%. So the consumer is stopping their spending, and that's going to create a recession. So risk assets are wildly mispriced here, and they're going to have to correct sizably. I actually have a downside target this year of 3,300 on the S&P 500, and I also have a downside target for the next year of below 3,000. So a couple things. Number one, a recession in this situation could actually be much, much worse. The main issue with that is that how does the Fed lower interest rates aggressively with inflation still north of 2%, right? I mean, we're still talking 4, 5, 6% inflation. Now, if it gets down sub 3, maybe they have some wiggle room, but we're not at that point yet. So to me, that's a very scary thing. And stocks and crypto have to be very aware that the Fed may be somewhat handcuffed here if we do hit a recession. And then the big question is, if we get into a recession, how do we get out? Does the global markets, do they know how to get out of a recession without the Fed printing money? And if the Fed can't print money, do we get in this long-term recession that could be very rough on stocks as well as risk assets like Bitcoin. The bottom line is the 25,000 is just a major pivot point on the chart, right? You had this kind of blip right here. We had the big dip down to this moving average, and then we had the run up where we stalled right there and finally broke up. So that now becomes a big target area of 25,000. But really, if you look down here, I mean, you're talking about getting down to that same moving average as a possibility in the not too distant future. And I do think that, if you look at the froth, and I said this, and you kind of mentioned it, how you were saying about liquidity in the market, how much leverage is in the market. Think about how bullish the global crypto markets have been. It was very reminiscent to me of when you had crypto at 69,000, that bullish bias in the markets, yet we were here at 30,000. To me, that's a negative divergence, and that's something that we have to be very scared about.
The Federal Reserve has finally admitted that a mild recession is likely for the U.S. economy, after months of insisting that the economy would be able to make a soft landing and avoid a recession. Staff members presented on the potential consequences of the Silicon Valley Bank collapse and the subsequent banking sector tumult, as detailed in the minutes from the March meeting of the Federal Open Market Committee. The status protection at the time of the March meeting included a mild recession starting later this year, and a recovery over the subsequent 2 years, the minutes stated, based on their assessment of the potential economic effects of the recent banking sector developments. Soloway asserts that a moderate recession is to be expected if the Federal Open Market Committee, FOMC, forecasts one. He thinks this portends a period of increased volatility and uncertainty for Bitcoin and other cryptocurrencies over the next few months. There has been widespread speculation that Bitcoin's steady decline over the past week will pave the way for a rally in lesser-known altcoins. Here are Soloway's opinions and his assessment of the market's valuation of the company's future earnings potential.
Yeah, I want to show you one other chart here. It's the Bitcoin dominance chart. And this actually could be telling us that we could be setting up for a drop in the Bitcoin dominance side of things. And what I'm seeing here is a little head and shoulders pattern emerging. And again, if we look at this, you have a little shoulder here, right? And we have this move down here. Here's your head, and then down to the shoulder. And then we could be making a little bit of a shoulder. So if you break approximately this area right here on the Bitcoin dominance, you could actually see this coming down, Bitcoin's dominance coming down decently, possibly all the way back to this trend line. So what that would mean, it doesn't mean to me that the alts are going to rally. It just means that Bitcoin could actually play catch up to the downside to where the alts were or are. I think the market wants good earnings here. And the reason the market wants good earnings is that the market realizes with inflation where it is, the Fed only has limited abilities to lower rates. And so if you see earnings falling off a cliff, that's going to mean, we're heading towards a recession. The Fed cannot loosen that quickly. Remember, the Fed is priced to actually hike rates in about 9 days for their next meeting. So again, what are they going to all of a sudden do, a pivot and start dropping rates with inflation still at 5 or 6%? I just don't see it. So if you start to see really a crack in earnings, it could mean not just a mild recession, as the Fed has said, but actually a worse recession, which again, with the Fed's inability to print money and get us out of it because of inflation, that could be really, really bad. Inflation can get back below or right around 2%. That gives the Fed the wiggle room to be able to lower rates and maybe print money in the future. Up here, they can't do it. I mean, just the bottom line is, we could see a bad situation with the economy. What are they going to do? Print money and then send inflation to 25%? I mean, we're going to be the next Venezuela. That's not going to happen. So you do not want a recession in the near term here with inflation this high.
The Federal Reserve has gotten itself into a tight spot. Between the looming economic downturn and the 5% is a rock and a hard place. Both auctions don't bode well for the markets, and year-over-year inflation to fight one will only worsen the other. If inflation remains high, the Federal Reserve will continue raising interest rates. And if it is a recession, the already sluggish growth of the economy will slow even more. In your opinion, what will the second half of 2023 bring for the U.S. economy and the cryptocurrency markets? How long do you think the bearish consolidation in crypto asset prices will last? In the space provided below, please share your thoughts and reactions to Soloway's analysis. Thank you for tuning in to Market Empire. We hope you found this interview with Gareth Soloway informative and thought-provoking. Be sure to subscribe to our channel to stay up to date on the latest news and analysis from the world of finance and investing. Until next time, happy trading.